Welcome to Creamer Media's Resources Watch, a weekly video roundup of the events and people making and shaping the news in the mining industry. This week, Kumba Iron Ore says steel market embracing the need for decarbonisation. World first hydrogen haul truck operational from August. And De Beers pleased with strong set of first half results. At a time when steelmakers the world over are taking strong steps to decarbonise steelmaking, Kumba Iron Ore's high-quality, high-lump iron ore is highly sought after, which positions the company well in the global fight against climate change.
The market is embracing the need for decarbonisation. Steel is not only central to how we live today, but it is also pivotal for the future. It is a critical ingredient and enabler for the energy transition across all renewable power infrastructure and electric vehicles. Kumba's greater share of lump and high-quality Fe positions us well for this development. Steel demand is expected to increase in the global shift towards renewable energy. Steel intensity in renewable power infrastructure is 10 to 30 times more than that of fossil-based power infrastructure. In an effort to decarbonize the steelmaking process, mills are investing more in DRI. There is a healthy pipeline of DRI projects coming on board in the next 30 years, and the share of DRI in global steel production is expected to almost triple to 26% by 2050.
The pilot world-first hydrogen haul truck launched early in the year has had some final changes made to it before it heads into the pit and goes into operational mode from August.
The first pilot, as you know, has been launched early in the year, and that truck has had some final changes to be made before we can put it into the pit, and it will go full operational mode from August. The second prototype is already underway, where we are taking learnings from our first truck in developing our second prototype. And I think, Martin, it's important to recognize that as we were driving to get the first prototype out to market as soon as possible, we've used existing components and retrofitted it into an existing truck. The next prototype is already learning from some of the engineering design and also the layout. So all of that is happening as we speak. And then we're targeting to have our full fleet replaced, as well as not only our fleet, but certainly the broader fleet for Anglo American by the end of the decade.
In the 6 months to June 30, rough diamond production of the De Beers Group increased by 10% to 16.9 million carats, reflecting a strong operational performance and higher planned levels of production to meet continued strong demand for rough diamonds.
It all starts with production and safe production, and we produced 16.9 million carats, which is a very strong performance and up from 2021. So we had good operational performance across all our assets. And I think this is in contrast to the beginning of 2021, where our assets, particularly in South Africa, were impacted by heavy rainfall. And this year we've had a really strong operational excellence across all assets.
So that would be South Africa, Botswana, Namibia and Canada.
Absolutely, and I think we bring out some more highlights there in Venetia, where at the last cut in the Venetia open pit. So it's a really important part of getting the remaining carats from our open pit before we transition to the underground in 2023. And a highlight for us in Namibia with Dead Marine is the inauguration of the Benguela Gem, so our new diamond recovery vessel, which has come in ahead of schedule, ahead of budget, and it's really contributing to the high quality carats coming from Namibia.
For mining news as it breaks, stay logged onto miningweekly.com and register for our free daily newsletter.